Hey friends, my name is Sahil and this is my Personal Finance Academy. A few months ago, every investor was going gaga about the chemical and pharma sector. But suddenly, now nobody is even talking about it. The focus has now completely shifted to other sectors. So lately I have received many queries on chemical and pharma stocks that have corrected around 20 to 40% from their peak. This has created panic among investors. Especially the new investors that have recently started investing are scared due to this recent correction. For example, if you look at the chemical sector, stocks like Deepak Nitrite went down more than 20% from the levels of 3000 to the levels of 2300. Alkyl amine went down almost 30% from the peak of 4700 to the level of 3300. Balaji amine corrected around 35% from levels of 5000 to levels of 3300. Lakshmi Organic corrected around 30% from levels of 600 to the levels of 400. In fact, majority of chemical stocks have corrected recently, including your Tata Chemical, which is down nearly 20%, Navin Fluorine, which is down around 20%, then Atul Limited, which is again down nearly 20%, then Rosari Biotech, which is down nearly 15%, and so on. Then within pharma, Laurus Lab corrected nearly 30%, Ipca Lab corrected around 25%, Kaplan Point corrected around 18%, and so on. Recently, even Davis Lab got corrected around 8% in a single day post the results. So in this video, we'll try to understand the reason for the fall and I'll share my viewpoint in terms of what you should do in such a downfall. Should you sell your investment or hold them or buy more? Alright, let's get started. So there are two reasons why chemical and pharma stocks are falling. First reason is due to profit booking. Both chemical and pharma stocks have jumped a lot in the last 1 to 2 years and became highly expensive from valuation point of view. For example, alkyl amine jumped more than 400% in just 1 year before it started correcting in July. At its peak in July, alkyl amine was trading at a PE ratio of 80. Then Balaji amine jumped more than 450% in just 1 year before it started correcting in September. At its peak in September, Balaji amine was trading at a PE ratio of 54. Then Lakshmi Organic recently had its IPO in March 21 and it was launched at a price band of around 130. Then within a few months, this share crossed the level of 600, giving almost 5 times return in just 4 to 5 months. At its peak, Lakshmi Organic was trading at a PE ratio of 124. Likewise, Rosari Biotech jumped 100% and it touched a PE ratio of 100 before it corrected. Deepak Nitrite had jumped more than 10 times in the last 2 years. In fact, majority of stocks were trading at very high valuations. Majority of them had generated great return for their investors. If you look at the pharma sector, Laurus Lab share jumped almost 10 times post-COVID. Then Davis Lab jumped 150% post-COVID. Kaplan Point jumped around 300% post-COVID. So both chemical and pharma stocks had generated great return for their investors. Moreover, their valuations became expensive and hence there was profit booking on chemical and pharma stocks. Now second reason is due to rise in commodity prices. Friends, this is very important. Whenever you invest in a stock, you should look at the risk aspect. And one of the common risks is raw material price fluctuation. Over the last few months, what has happened is that commodity prices have gone up sharply. This has directly impacted its profitability. Hence, majority of chemical and pharma companies have shown weaker quarterly results. For example, Deepak Nitrite operating margin fell down from 30% in June 21 quarter to 23% in September quarter. Due to that, in spite of generating 10% growth in revenue quarter on quarter, its profit fell down 16% quarter on quarter. Likewise, Lakshmi Organic operating margin shrunk from 20% in June quarter to 5% in September quarter. Its profit tanked around 85% from 102 crore in June to 15 crore in September quarter. Then Navin Fluorine profit went down around 7% year on year. Tata Chemical profit went down 23% quarter on quarter. Alkyl amine profit went down 31% quarter on quarter. Balaji amine profit went down 11% quarter on quarter. In short, the majority of chemical companies' profit margin contracted in September quarter as compared to previous quarter due to rise in raw material prices. In case of pharma, again Laurus Lab quarter-on-quarter profit contracted 16%. In some cases, the quarterly results were not as per the expectation. Hence, both chemical and pharma sectors have shown correction in the stock price. I hope now you understand why chemical and pharma stocks have contracted in the last couple of months. The simple reason is that both sectors have rallied a lot in last 1 to 2 years and generated great return for their investors. Due to this sharp rally, the majority of shares became overvalued. Then, due to rise in commodity prices, both sector operating margin contracted that resulted in fall in profits as compared to last quarter. Hence, both sectors have seen profit booking and hence correction from its peak. Now, the most important question is that chemical and pharma stocks have corrected 20 to 40%. Should you buy them or hold them or use this opportunity to invest more? So, if you are a trader or someone who invests for a few months to make quick profit, then I can't provide any suggestion. However, if you are a long-term investor and investing for the next 5 to 10 years, then all I can say is, if you have invested in fundamentally strong companies, then you don't need to worry at all. You can hold your investments. In fact, any dip in fundamentally strong companies is an opportunity to buy more. Please do not panic. You can't expect the stock to only go up. There will be corrections. But you need to understand one thing. Both chemical and pharma sector in India have high potential. They are not short-term trends. For example, both chemical and pharma sector in India would continue to benefit from China Plus One theme. India still contributes just 4 to 5% of overall chemical production in the world, and there is immense room for growth in the next 5 to 10 years. Then within chemical, the specialty chemical sector would grow at a much faster rate. Within pharma, India is already among the leading pharma manufacturers in the world. India has a big advantage of low-cost labor and has the right expertise in both pharma and chemical sector. On top of that, Indian government has a strong focus on manufacturing sector with Atmanirbhar Bharat initiative that would continue to drive the chemical and pharma sector in India. Within pharma, Indian government want to reduce its dependency from China on import of APIs. Hence again, API manufacturing is a big theme within the pharma sector. Then there is increase in lifestyle related diseases and there is high demand for contract manufacturing within pharma sector. In the future, the demand for medicines would only going to increase. Hence, the long-term growth prospects of both chemical and pharma sector are intact. Yes, you might not see the crazy jump in the share price that happened in the last 1 to 2 years, but still there is enough potential in the future. However, you should always remember one thing. Always look at the fundamentals of the company and invest in fundamentally strong companies and invest at right valuation. There is no point in investing in highly overvalued companies. But again, there is no fixed formula for right valuation. Although generally speaking, you should always check the PE ratio for valuation. In case you find the valuation expensive, then one strategy is that you can make an entry and buy on dips or invest systematically at different levels. In case you want to learn every aspect of valuation and how to pick fundamentally strong companies, you can explore my complete course on money management. I have provided the website link in the description. Now tell me in the comments, which is your favorite chemical and pharma stock? And are you holding, selling or buying more after the correction? I hope you will find this video useful. I'll see you in next video. Till then, take care.